Alrighty, so on Thursday at 8:30 a.m. Eastern Time, the Bureau of Economic Analysis is going to publish the US GDP numbers. And if those US GDP numbers are negative, even if they're a little bit negative, well, then the US is going to be officially in a recession. And this seems to be worrying people. In fact, if you look at the Google searches for recessions, this is what you're going to see. So today, what we're going to do is we're going to be looking at recessions and what they mean for your portfolios, and more specifically, what recessions mean for your crypto portfolios. We're going to look at how long recessions can last. We're going to look at what you should be doing, what actions you should be taking, and we're going to look at how you can protect your crypto portfolio so when we come out of the recession, your crypto portfolio is ready to go to the moon. So let's do this. What should I play? What song should I play? You know, I love you. You guys are a bunch of DJs. And you know, Fred, I know Fred's watching this and he's cringing. But do me a favor, let me know what you think. Tell me in the comments and give us a like if you think we should keep the get out of bed bitch going. It's the only one that keeps me going. It's the one that keeps me going. So I don't know what you think. Carl, what do you think? Keep it or don't or lose it?
You have to have a vote. Maybe you have to cycle it.
Okay, it's a vote. So hit the like if you think we should keep the song going. If you don't, then keep quiet and let's see what happens. Alrighty, let's get into this. First of all, I'm Cryptoman Ran. You should know that by now because you've been here before. And if you haven't been here before, then subscribe to our channel. This is the one place that's been with you in the bull market and has been with you every single day in the bear market. 4 shows every single day. In the morning, we have Sheldon's trading. 5 shows every single day. In the morning, we have Sheldon's trading show. Then we have the trading show for the Bears with Kyle. Then then we have Miles. Miles is becoming very much like a coin bureau type of guy. He's doing these deep dives. He's got a big deep dive up his sleeve. I've seen what he's doing for tonight. You should really watch Miles' stream. And then we've got our gaming legend Hustle. And we're going to be here in the bull market and the bear market. We're going to help you through it, whether there's a recession or whether there's no recession. That's how it's going to be. So what do you need to do? Well, what you need to do is you need to show up and you need to smash the like button. That's all you need to do. And if you're not a subscriber to our channel, subscribe to our channel. And if you haven't signed up to exchanges using our referral links, do it, because not only am I going to 10x portfolios here, but it does help us support the channel. That's pretty much what it is. Yeah, people say that Ran's trying to be more formal. I can't be formal. It's
very funny.
We can't lose our personality just because there's a negativity in the market. You can't lose our personality. Anyway, you guys told me that I'm taking too long to get into the meat of things. So let's do some shorter shows. Let's get into the shows. Pretty quickly. I think let's start off by looking at the Bitcoin chart because that tells a story. So what happened with the Bitcoin chart? Pretty simple. We were in this range. And when we were in this range, I kept saying to you guys, it's good to trade this range. If you could trade this 18,800 all the way up to 21,500, you had yourself some good profits. But then we broke out of this range. And we were hoping that we'd stay above that 21,800. Well, we never managed to keep that 21,800. Now we've broken under that key 21,800. And you'll remember that Gareth was on the show yesterday and he said he's bullish, but as long as Bitcoin doesn't close below the 21,800 level. Now we've got Bitcoin under the 21,800 level. Then we go to Ethereum, and Ethereum's had quite a good run, but now you can see that Ethereum's also back under the range and going down $1,379. And the other chart that we've all been watching is this Dixie. Remember we spoke about this Dixie, this chart over here. We were hoping that the dollar would weaken and it would go through this trend line. It would break down below the trend line. Unfortunately, what happened was the dollar didn't break below the trend line. So we now bounced on that trend line. And then something even more ironic happened. So we bounced off the trend line and nothing happened to the US stock markets. Nothing. zero. I mean, if you look at the Dow Jones is flat on the day, minus 20. The NASDAQ was flat, now it's down 100 points, and the US, the S&P 500 is down 21 points, which is less than 0.5%. So we saw the dollar strengthening, and we saw the stock markets pretty much not really moving very much. So you can see there's the NASDAQ now down 100 points. 100 points is nothing. And especially on a big week like this, we've got one of the biggest weeks in market history and in crypto history. We've got, here's just a reminder of how big this week actually is. Yesterday, before the earnings, we had something happen which I think shocked the markets. But even though it shocked the markets, didn't actually move the futures. What happened was Walmart cut its quarterly profit and its full year profit, saying, get this, they said that inflation is causing people to spend more on food because they have to spend more on food because food and shelter you have to have, and less on things like clothing and electronics. And that's pretty much where they have all their margins. So remember, when it comes to food, food is very competitive. Not only is food super competitive, but there are also government regulations in terms of what you can and what you can't sell food items for. That doesn't exist on things like electronics and clothing. And so what Walmart is saying is they're saying, look, hold on a second. We have to cut our full year expectations and our quarterly expectations. Why? Because consumers can't afford to buy anything other than food because there is an increase in inflation. And the bad news on that front is that Russia, remember I said to you that Russia cut the Nord Stream 1 gas pipe that supplies Germany, right? So, and remember they started up again. Well, now what they came out and said was they said that there is routine maintenance, so temporarily halts gas flows via major pipeline. They've cut more gas flows because of what they're calling routine maintenance, and now Germany's only getting 20% of the gas that they need. And what Russia's doing here is Russia's playing a little bit of a game, right? They're saying that the reason why they're cutting the gas pipeline is because of the Western sanctions. Because of the Western sanctions, they haven't been able to service the gas pipeline. It says the new blow comes at a moment of high tensions as Russia and the West exchange economic blows in response to Moscow's actions in Ukraine. The European Union has accused Russia of resorting to energy blackmail, while Russia, the Kremlin, says the gas disruption has been caused by maintenance issues and the effect of Western sanctions. So that could send inflation up even higher. And higher inflation is now starting to really impact company earnings. And we're going to see that today, because remember that today is the beginning of one of the biggest weeks, or one of the biggest, we're in one of the biggest weeks of the economic calendar. So why is this one of the biggest weeks of the economic calendar? As we sit here right now, the Fed is meeting, and they are deciding the fate of interest rates. And tomorrow, we should get a decision around interest rates. We'll talk about that decision in a second. Today, we've got 3 sets of earnings. Very, very, very important sets of earnings. So you've got, remember, this week is a huge week for earnings. Over 40% of the NASDAQ are reporting today, tomorrow, and Thursday. And I think the key ones that are reporting today are Microsoft, because Microsoft is such a behemoth. But more importantly, the one that I'm much more interested in today is Google. So Google is also reporting today, and Google will give us an indication as to what's happening with advertising spend. And my concern is that because inflation is so high and because consumers are spending a lot less, I think advertising on Google is going to drop. Remember, Google is very much an advertising-driven business, and I think that if there's any chance that companies are going to disappoint, I don't think it's going to be Microsoft that disappoints. I think what we'll see in the disappointing numbers, we'll see Visa. And the reason why Visa may disappoint is because if the economy is really slowing down, then the first thing that you're going to slow down is your credit card transactions are going to slow down, or are they going to slow down? And then you're going to have Google, which is going to tell us what the state of advertising is. And the state of advertising will tell us about the health of the advertisers and all the companies that are actually advertising. And then tomorrow, we've got Facebook's earnings. Now, Facebook's earnings, again, are driven very much by advertising earnings. So it'll be interesting to see what happens tomorrow. So that's happening today and tomorrow. We'll keep all our eyes on those numbers. Tomorrow night, 8 p.m. South African time, which is, it's 1 o'clock. It's 1 o'clock Eastern time. you've got the interest rate decision, and then 30 minutes after that, you're going to have the press conference that Powell does after he gives us the increase in interest rates. Now, what we know for sure, well, not for sure, but what 75% probability that Powell's going to increase interest rates by 75 basis points tomorrow. There's a 75% chance that Powell's going to increase interest rates by 75% tomorrow. So if he does increase it by 75% tomorrow, 75 basis points tomorrow, no big deal. What's important is what he says or what the guidance is after the interest rate increase. And remember that he has one thing on his mind. He is trying to get inflation under control. And we're now starting to see that same inflation that he's starting to get under control or trying to get under control is starting to impact earnings. They're starting to slow down the economy. And so we really need to get this interest rate under control. And tomorrow is one of the last chances that he has to act aggressively before the USA goes into inflation. So tomorrow's outlook is going to be big. And I think the questions that we're going to be looking out for tomorrow is we're going to look out to see how he answers when he's asked about a recession. Rest assured that some of the journalists are going to speak to him about a recession. They're going to ask him, well, so if we do go into a recession tomorrow, is that going to change your course? And my suspicion is he'll say, look, we are focused on inflation. Inflation is bad for all of us. And even if it means that that we go into a temporary recession, that doesn't matter. We are focused on reducing inflation. And the truth is that he's probably doing the right thing, because if we saw anything in the Walmart numbers, it is that a recession is that high inflation is bad for everyone, and that high inflation is starting to slow down the economy, and consumers can't afford to do anything because prices are just getting so ridiculously high. The good news is that it seems that he's going to get inflation, maybe not to his 2% target, but he's going to get inflation pretty much under control. And that is because I think we've seen the days of the price rises. The gas prices have started to come down. The oil prices have started to come down. In fact, the gas prices did come down. But if you look at the gas prices now, because of what happened in Germany or what's been happening with the pipeline, this is when the pipeline crisis started. And you can see that the natural gas price has gone back straight up again. And again, that could influence inflation and get us all into inflation. All right, so that's what we're watching on Tuesday. So today, Wednesday, and Thursday. And then on Thursday, we get the GDP numbers, the US GDP numbers. And that's what everybody's sitting and panicking about. So let's spend some time talking about the US GDP numbers and what those US GDP numbers actually mean, and specifically what they mean for us as crypto holders and for our portfolios. And I think the idea is not to be a typical YouTuber and to say, oh, everything is good for your portfolio. Everything's good. Try and find it. Let's actually talk honestly about what a recession is and how a recession can impact your crypto portfolios. Because if you cut the bullshit out and you speak, you tell it as it is, well, the assets that are going to get hit the hardest during a recession are the most speculative assets. And right now in your portfolio, I hope to God that you've got nothing more speculative than crypto in your portfolio, because crypto is one of the most speculative asset classes that I actually know. So the idea is to face the reality and say, if we are going into a recession, well, the asset class that is going to get hit the hardest, the asset classes that are going to get hit the hardest are the speculative asset classes. But there's actually a way to trade a recession. If you understand what recessions are, if you understand what makes up a recession, how they're measured, how long they last, well, then there is actually a great way to trade a recession so that you come out better and stronger on the other side. And that's exactly what I want to be talking to you guys about. So let's get into it. Let's talk about recessions. Should we? All right, let's talk about recessions. So the first thing about recessions is, well, I don't know if we should be worried at all. And the reason why I don't think that we should be worried is because...
And Mr. President, we're getting GDP numbers on Thursday. How worried should Americans be that we could be in a recession?
We're not going to be in a recession, in my view.
And Mr. President, we're getting...
So Joe Biden has pretty much assured us that we're not going to be in a recession. So there's probably nothing to worry about. But despite that, people are still worried about a recession. I'll show you how I know that is if you look at the Google searches for recession, this is what you get. So you can see that the last time that we got high Google searches for recession, we're actually in a recession. And that was the recession of the COVID recession, the March 15 to in March 2020 COVID recession. That is the last time people Googled recession. And this time, people seem to be Googling recession much more than they Googled them in March. Maybe that means that the recession here is going to be more severe. What we do know now is that the narrative is shifting. We were in a narrative of inflation, and if you go back to the Bitcoin chart and you take it on a daily time frame and you zoom out and you go all the way to here, 12th of November, if you look at that 10th or 11th or 12th of November date and you go and do some Google searches, you'll see that that is when the inflation narrative started to play out. And we had this inflation narrative carry us all the way down, and now it feels like the market is going for a new narrative, and that new narrative is recession. That's what the new narrative is. And so since we are now going to get into a recession, I think we pretty much need to learn very quickly what a recession is about and how it can affect our crypto portfolio. So what is a recession about? What is a recession actually? The simple definition, and the one that's been the definition for a long period, in fact, it's the widely accepted definition, is a period of temporary economic decline in which trade and industrial activity are reduced, generally identified by a fall in GDP of 2 successive quarters. That is what the Oxford Dictionary definition is of a recession, and it's been accepted by economists as the definition of a recession. It's 2 consecutive quarters of GDP decline. That is what a recession is all about. It does seem, though, like 1 week before the numbers are starting to get published, the White House is starting to maybe change the definition of a recession and maybe prepare us for the fact that we are going into, that the GDP numbers are going to be negative when they're released at 8:30 on Thursday morning. And they're trying to say that whilst some maintain that 2 consecutive quarters of falling real GDP constitute a recession, that is neither the official definition nor the way economists evaluate the state of the business cycle. Instead, both official determinations of recessions and economist assessments of the economic activities are based on a holistic look of the data. Now, I've always thought that the GDP numbers were a holistic look on the data, because GDP numbers basically give you the heartbeat of the economy. They tell you how the economy has been performing. So I'm not sure how GDP numbers don't actually capture this. Anyway, based on these data, it is unlikely that the decline in GDP in the first quarter of this year, even if followed by another GDP decline in the second quarter of the year, indicates a recession. So that's what they're talking about. They're saying even if the GDP numbers decline 2 successive quarters in a row, well, this time I think we're going to change the definition, and that's not going to be a recession. And I'll show you why they say that in just a second. Well, let's look at quarter one. So in quarter one, we had a negative 1.6% GDP growth. So that was the first GDP decline. And now the Atlanta Fed is forecasting a negative 1.6 GDP growth again for the second quarter, even though economists are actually forecasting a 0.5% GDP growth. So the first thing you need to look out for is say, look, even though Twitter and YouTube and the news and the White House have warned us, there is a small chance, very, very small, but there is a chance that economists may be right. And if economists are right, if the consensus forecast is right, maybe Joe Biden is actually right when he says that
GDP numbers on Thursday. How worried should Americans be that we could be in a recession?
We're not going to be in a recession.
So maybe he's right. Maybe by some kind of luck or maybe some kind of manipulation of the numbers, we're not in a recession. But more realistically, we're probably are going to be in a recession, which means that we've had a period of 2 quarters of negative GDP growth, which indicates that we've had a serious economic slowdown. So if we have had a serious economic slowdown, you could ask yourself, a serious economic slowdown from what? Well, we slowed down from previous quarters. The only thing is that in previous quarters, if you look at where the slowdown comes from, it comes from a period where the Fed stimulated the economy so much that they went from a balance sheet of $3 trillion to a balance sheet of $8 trillion. So from, $3.8 trillion to $8 trillion. So they put in $5 trillion into the economy, stimulating the economy in the form of various stimulus checks, grants, business packages, rescue packages, etc. And so they stimulated the economy so much that the economy grew in one of the periods by 33.8%, and then in the following 1, 2, 3, 4, 5 periods grew by an average of, call it, 5 or 6%. Okay, so we went from a period of huge stimulus, $5 trillion worth of stimulus, to now declining by 1.6%. But you decline from where you were. Now, if I give you $5 trillion and you put them into the economy, you raise the economy to a very high level. And then, of course, you're going to, when we start slowing down ever so slightly, you are going to get negative GDP growth. And that is the first thing that you need to look at. We're not in a depression. We're just slowing down from where we were before. But where we were before was a period where the government put $5 trillion into the economy because they had to protect the economy from the effects of the forced lockdowns and whatever else. Anyway, what happened in this period? Very simple. In the period where the government was printing money and giving everybody stimulus checks, consumers got drunk. And what they did was they started to spend. And they thought that this period where they had so much money would never ever end. It's the same as the crypto people, who all of a sudden became very, very rich very, very quickly because we had the biggest bull run of our lives. And the reason why we had the biggest bull run of our lives is because when you print money into the economy, what runs the hardest is the illiquid asset class, which is the most highly speculative, which of course is crypto. And so we thought that the bull run would never end, just like consumers thought that the good economy would never end. So what did they do? Well, they did two things. They diminished all their personal savings. So if you look at the personal savings rate, when we gave them stimulus checks, they started to save for a very short period of time, but then they started to spend. And you can see that the economy has been slowing down, and what's happened now is to maintain their lifestyle, to maintain all these amazing houses, and to maintain the lifestyle that consumers had created because they thought that the music would last forever. Well, now to maintain that, they've had to eat through all of their savings. Not only have they had to eat through all of their savings, but they also had to now take out more credit. So what you can see is they took out more and more and more credit. And now, when you look at this chart is not actually showing you consumers taking credit because they want to spend. This is now showing you consumers taking credit because they're getting desperate because the inflation is so high that they're struggling to put food on the table, and the only way that they can put food on the table is to max out their credit cards. Okay, so that's pretty much where we are in terms of the economy. Not only that, corporates did exactly the same thing. So what corporates did was they also thought the music would last forever. So what did they do? They started to hire people, to hire people, to build bigger plants, et cetera, et cetera. And now what they've realized is, oh shit, the music stopped. The government is taking money out of the economy. That is slowing down the economy. And now all of a sudden we've got the biggest workforces that we've ever had. In fact, if you look at workforces, this is, let me try and find you. I should have a chart here of the workforces. I may have one somewhere. I don't have a chart of that. But what you can see is that the workforces are now at the highest point they've ever been, and you've got employment at the highest point that it's ever been. All right, so that is where we are. And I guess we probably will get into a recession. But I kind of think that I agree with the White House in a certain way that maybe this is not really a real recession. And the reason why I say it may not even be a real recession is because even though we have had 2 quarters of negative GDP growth, we came off a very, very, very high base. And actually the economy is actually quite healthy because everyone has a job. We've just slowed down from a period where we had $3.5 trillion in the economy. All right, so we got that. All right, now let's look at recessions. Let's look at the previous recessions. Let's look at how long they've lasted, because if we can look at how long they've lasted and we can start to understand the structure of recessions, then maybe we can structure our portfolios accordingly. Because remember, I said to you that the speculative assets are the ones that get hit the hardest when you get into a recession, right? So Bitcoin, your crypto portfolio, your altcoins are going to get hit hardest. Then next, Bitcoin is going to get hit, and then your speculative stocks are going to get hit, etc. And so that means, well, I mean, you can look at it as a glass half full type of guy, and you can say, you know what, that's a great opportunity, because if we are going to go into recession, you may get an opportunity to buy some of the best top quality cryptos at prices that you probably will never see again after this recession. So that is the first bit of good news when it comes to recession. The second bit of good news when it comes to recession is that speculative assets crash first. And so that means that we may have seen one of the biggest crashes, or we've seen the majority of the crash. The next good thing about recessions is that recessions don't last forever. In fact, recessions have a pretty short life cycle. Recessions usually, or if you take the last 5 recessions, recessions last about 12 months. And when I say recessions last about 12 months, from the beginning of the recession, which for us would probably be Thursday, until such time as the recession ends, usually lasts about 12 months. And that means that in those 12 months, you've got one quarter where the recession, where the GDP numbers are actually positive. Because remember, you enter when you have 2 periods of negative GDP growth, which is where we are today, and you come out of it at the last quarter, which actually gives you a positive reading. So the average recession, or the average recession in the last 5 recessions, and we'll talk about the last 5 recessions, has only lasted 9 months, which is not a long time. Okay, now, why am I still so bullish, even though we may have 9 months or 12 months of this left to go? Well, the answer is very simple. Markets usually tend to see recessions recovering before recessions actually recover. Okay, so markets will say, hold on, if this recession is going to be 12 months, I'm going to start recovering after 9 months or after 6 months, because markets are forward-looking and markets usually know what's happening first. So even though recessions could last 12 months, which actually is 9 months, well, markets can recover 3 to 6 months before that, which means that this is not going to be a very long recession. And what you'll see in the data that I'm about to give you is that markets don't always crash very far after the beginning part of a crash. So let me show you where I got this data from, and let's take it from there. So, I mean, I don't know how I'm supposed to concentrate when this is what I see on my screen. All right, so let's look at recession. So if you look at recessions, you can see that this is an article which covers recessions, and I'm gonna start from the bottom, and then work our way up. The first thing is there have been 11 recessions in the United States since 1948, which is World War II, averaging out at 1 every 6 years. However, the periods of economic expansion have been varied and lasted as little as 1 year and as long as 1 decade, whereas recessions usually last a whole lot less. After recessions comes usually a period of economic contraction, and usually those can last for 1 year and maybe even as long as a decade. But recessions last, well, you'll see now that the maximum recession we've seen of late is 2 years. The average recession before 2007 lasted about 11 months. The Great Recession, which was this huge recession which was started off by the subprime mortgage, lasted 18 months, and the 2020 recession lasted 2 months. Literally lasted 2 months, and that's the shortest ever on record. So that is, I mean, that's like a baby recession. Okay, so let's quickly look at the recessions. You had the 2020 recessions. The 2020 recession was the worst since the Great Depression, and that is because of COVID. So it was started by a black swan event. Okay, so that's not one to look at. Before that, you had the Great Recession. Great, I mean, it wasn't that great for those of us who were there. It lasted about, let's see, how long did it was started off by the subprime, the US housing collapse. It lasted from December 27, 2007 to June 2009, which is about 18 months. That's how long that recession started. Before that, we had a huge recession, which was the dot-com bubble, which burst. And before that, we had the 1990 and 1991 recession, which was a very short recession too. And then the 1980 to 1982 recession, which I think that was a double whammy. So you had like a recession, and then you recovered, and then you had a recession. So you see, you had a recession, and then you recovered in Q4, and then you had another, and then you got into another recession here and here. That's they had like a double whammy recession, if you can have a double whammy recession. All right, let's look at the numbers. So let's take the 1980 to 1982 recession. The recession lasted 22 months, in that period, the market dropped 25%, and it took 15 months for the market to recover to get to its previous, to the high or to the level pre-recession, not when it started to recover. You can see that the recovery always starts to happen first. Then let's look at the next recession, which was, I think it was the 2001 dot-com crash. This was a serious recession. This was a serious collapse. The entire internet bubble collapsed. And what you can see here is that this recession lasted 8 months. The market dropped 70%. And for the market, the NASDAQ to get back to where it was before it started, took 14 years. The NASDAQ didn't see 14 years. Very different kind of recession. Then we had the housing market. It was an 18-month long recession. Market dropped 55%. But you can again see that the market started to recover about halfway into the recession. Look here. Bang. That's where the market starts to recover. And it took the market 18 months to get back to where it started, or 4 years to get back to the place where it started. All right, so, and then you got the 2020 recession, which was a baby recession. It was a 4-month recession. Okay, so that is what recessions are. You can see that it's not the end of the world. We've probably had most of the suffering already. We now need to look at earnings, because earnings are going to show us how much the economy is going to be slowing down and everything else. Let's talk about what you need to do. How do you protect your crypto portfolio? What do you need to do to protect yourself against a recession? Well, the answer is pretty simple. Probably nothing. Probably nothing different from what you have already been doing, if you have already been doing the right thing. So again, let's just remember that speculative assets get hit first and get hit the hardest, but they also recover first. And when they recover first, they recover the fastest, okay? So your crypto falls into that basket. It's hopefully the most speculative investment that you got, unless you're holding, I don't know, tulips, marijuana, I don't know, some kind of illicit drug. But otherwise, your crypto investments are your most volatile investments, other than some people's wives who are also very volatile. It's true. It's true. Okay, so what do you need to do? Well, the idea is pretty much to do nothing. Just keep doing what you're doing. And what we're doing is we're recognizing that markets are going to go down. We're recognizing that crypto has already been hit. It's already been hit by the great unleveraging, which is the black swan event in crypto, which hasn't yet happened in markets. And so crypto is probably a little bit oversold. So what do you need to do? Well, you need to use this as an opportunity to keep dollar cost averaging. You've probably got a couple of months, I don't know how many, could be 3 months, could be 6 months, could be 9 months, to dollar cost average. And that is probably the last opportunity you're going to get before some kind of aggressive market recovery, like we've seen in every other recession. So in every other recession, you've seen a down, and then you've seen an aggressive market recovery. The time that we have now is pretty much a gift. You got to use this to DCA, because chances are, if you DCA now and you DCA into good projects now, well, those are the projects that are going to help your portfolio explode in the next bull market. The same Bitcoin that you were happy to buy at 50,000 and at 60,000, you can now buy at 20,000. The same Solana that you were happy to buy at $170, you can now buy at $35. The same Ethereum that you were happy to buy at $3,800, you can now buy at $1,300. And the longer this lasts, the better it is for you if you're a serious investor and you have a lot of long-term conviction in this space. Just DCA into good projects. And I think what we'll do tomorrow or the next day is actually make a shopping list of these good projects. We'll look at the pros, we'll look at the cons, and then we'll decide which projects you need to be DCAing into. The other thing that you should be doing during a recession is get away from your computer. Find something else to do. Because if you're going to sit and you're going to obsess about every time that the Bitcoin price moves by $1,000 or $2,000, you're going to blow yourself out of this market. You're going to start taking bullshit trades out of boredom because you got nothing else to do. You're going to start taking bullshit trades and you're going to blow yourself out. I've seen many traders try to trade bear markets. It's one of the hardest things to do in your lives. Most people actually land up losing because the market becomes so unpredictable. But if you are dollar cost averaging into good stuff, you cannot be blown up. So make sure that you dollar cost average. Don't try and trade every move. Try and find something else to do rather than looking at your phones every single day, because this recession is going to get pretty boring. We are going to get some bad news, and we are going to get some bull market rallies in this recession, some bear market rallies in this recession. If you want to trade the range. And when I say trade the range, I mean take that range that we spoke over there, and when everyone gets bullish, when everyone says that we're going to break out and that maybe this breakout is going to 28,000, well, that's when you go short. And when everyone says when everyone says it's hammer time and we're going down to 17,000, well, that's when you go long and trade the range. But don't try and trade momentum, because if you're trading momentum in a range-bound market, you're going to get destroyed. That's pretty much what's going to happen. All right, so that's it. Keep your job. Make sure you keep your job, because people are going to lose their jobs. So keep your job, keep your health, have some fun, keep your friends, keep your hobbies, keep DCAing, and you'll survive a recession. Simple. That's it. As simple as that. Got it?
I have it written down in my note.
Amazing. Great. Also, what you should do in a recession, I'll tell you what else you should do in a recession. You should open an exchange account using the Crypto Banter referral links. I'll tell you why. So if you open a Binance account using our referral links, they've given us a very unique deal. You see the deal, that's the deal on the screen. So if you open it, you get a deposit bonus, plus you get $5 for making your first trade. And you can see that all the details are here on the screen. There's a referral link below. Do it. This is a very limited offer. This offer is valid for a week. So do it. Also, in a recession, we have to help you guys get out of a recession. How I'm going to help you guys in a recession is I'm going to 10x portfolios and I'm going to 2x portfolios. And that's exactly what we're going to do today. Just let's have fun. Let's reward our communities. I know everybody's is in a recession. I know everybody's lost money. So let's try and help. Let's try and do our bit. And how I'm going to do a bit is you sign up to Binance using our referral links. I then select winners every single day. Not every single day, only the days that I actually remember. And if you have money in your account, I will 10x your portfolio if you are the red person. I will 2x your portfolio if you are the yellow person. And I'm going to do this every single day in the bear market and in the recession to make sure that our community is actually recession proof. It's so simple to get in. Just open an account using our referral link. You don't have to KYC. And 16,428 is the number. Let's unhide 16,428. The red one gets 10x, and the 16,428. The red one gets 10x, and the yellow ones get 2x. Okay, up to $10,000. Remember that. All right. So the first one is, it's a duplication. Okay, so the first one gets $308, 10x, and then the other one gets 0, 2x. That's what it is.
You give him 10 as well.
No, we can't. The 0 guy, I'll 100x him because I've got nothing to lose. All right, guys, listen, love you madly. Let's listen out for the earnings today. We got Google, Microsoft, and Visa today. Let's make sure that they're on track. If there's any negative earnings surprise, rest assured the Nasdaq's not going to hold. Crypto's not going to hold either. We will see you guys again tomorrow. We're going to talk about interest rates. We're going to also bring you live coverage of Powell's press conference, and then on Thursday we're going to give you live coverage of the GDP numbers. What do you say we start the shows a bit earlier? Let me know if you think we should start the show 1 hour earlier, and that way we can cover the US market open and a whole lot of other things. Let me know what you think. I'll see you guys again tomorrow. Until then, have fun, stay safe, and trade well, my friends.